Hello everyone, welcome to today's session in Quantsapp. In today's lesson, we will be talking about Fibonacci retracement, how you can trade with it in intraday. But before starting the video, if you are new here, you can go in the description. There is a link below. With the help of that, you can download and install Quantsapp web application. After successful registration, you will get some free tools that will help you out in your trading. In the application, we have a video library. So in this video library, you will get some videos, okay, and these videos are available in multiple languages based on various strategies. So you can watch them in your meantime at any point of time. If you guys are having any kinds of doubts or query, so you can contact us from here. In the support, you will get our contact number as well as the email ID. So you can contact us and we will be there to sort your queries out. Let's start today's lesson. In today's lesson, we will be talking about Fibonacci numbers, Fibonacci retracement level, and how you can trade with it. Now, whenever we are talking about Fibonacci numbers, so these are the natural numbers, not naturals, but you can say random numbers that exist in nature. For example, in the petals of a flower, okay, in branches of tree, in seeds of fruits and plants, okay, and when we are using it, so we use in mathematical theory, we use these number in mathematical theory, in financial markets, okay, in algorithms. So that is when we are also using these numbers and the application of these numbers in technical analysis or when we are trading with it, okay. So now, when I'm talking about Fibonacci retracement or Fibonacci number, okay. So first of all, let me write the topic here. So we are talking about Fibonacci today, okay. Now Fibonacci. So generally, when we talk about these numbers now, so these numbers starts from 0 and 1, okay. So 0 and 1, and then when we will keep adding these numbers, okay. So for example, if I'll add 0 and 1, so I'll get 1. Then again I have to 1, 1, so I'll get 2, okay. So I'm just adding the number with the preceding number, right? So 2 plus 1, then we will get the 3. 3 plus 2, we will get 5. 5 plus 3, we will get 8. Okay. Then 8, 5, we will get 13. Okay. Then 13 and 8, we will get the 21. Okay. So similarly, and this will go on. Okay. So these are all my Fibonacci numbers. Okay. So these are the Fibonacci numbers that exist in nature, right? Okay. Now, out of these Fibonacci numbers, okay, we calculate the golden ratio, and from that golden ratio, our markets usually retrace back itself. Okay. Now, if you will divide the number from the preceding number, so at that time you will get the golden ratio, right? And from that golden ratio, we will be drawing the certain levels of Fibonacci. Okay. Now let's see what are these Fibonacci retracement levels. Okay. So for that, I am going in the Quantsapp application, and from the analyze section, I will open the charts. Okay. Now what we will do, we will analyze the retracement levels in 15-minute time frame, and then we will take our trade, we will take our entry in 15 minutes, or you can take the entry in 3 minutes, or if you are a scalper, you can trade in 1 minute as well, right? But for the analyzing the market, I will go with the 15-minute. Okay. So I am applying 15-minute time frame here. Okay. I will just remove quickly all of this removing indicators. So as I have removed all other indicators, so now I will add Fibonacci retracement here. Okay. So for Fibonacci retracement, I will go here. I will choose the Fibonacci retracement. Now I want to know a movement, a good movement in Nifty. Okay. And I want to know from where my market will retrace back or it will move in certain direction, right? So for that, I can see there was a good movement in Nifty. Okay. So the date was, I'll tell you the date as well. So just a second, first of all, let me remove this one. Okay, so for that level, I can see there was a very good movement started in Nifty from, you can say 19 November at 2 p.m. And then this movement, my market went down, and this movement actually ended at this point of time. Okay, so the candle was approximately 9:30. Okay, on 21 November 9:30, and the market was in sideways direction after that for a certain time, right? Now, if this was a good movement, so I will apply my Fibonacci retracement from this point to this point. Okay. So for that, I'm again selecting this Fibonacci retracement. Okay. And I will just apply it here. So from the upper point, okay, from the upper point, okay, so just a second, like this. So from the upper point, from where my movement actually started, so you can see from this point of time, from this candle, the movement actually started. This was the red candle, okay, from where the downward movement started. And then for the lower direction, I know my movement, it existed till this point. Okay, so I will just keep my level till here. Okay, so I'm keeping my level of Fibonacci retracement till here. Okay, now these are the certain levels that I have drawn, okay, and these are customized. So I will also tell you the setting as well. So in these settings, you can see I have only applied 0.382 golden ratio, then 0.618. Now here you will get 1 in your Fibonacci you can say tool. Okay, but you have to remove that one and you have to apply 0.66 here. Okay, so that is a customized number, okay, that I have created myself. Then 0.5 and 1.618, you have to disable all others golden ratio from here, right? So you have to just enable these 5 numbers, right? Now how to analyze this Fibonacci retracement? So now as I have analyzed it in the 15-minute, now for the entry I will go in the 5-minute time frame. Okay, in the 5-minute time frame. Okay, now what will happen here? What is happening here? So let's see. So you can see there was a good downward movement in the Nifty. Okay, so when this movement came from this point, when this movement came from this point to this point, okay, so at that point of time I applied this Fibonacci retracement. Okay, now I want to know if this trend, if it will retrace back from this level or this level or this level. Okay, so that is my aim. Okay, so for that what I will do, I have drawn this level. So you can see from 0.66 to 0.618, that is my, you can say a range. Okay, so I will always analyze this range. Okay, the short term movement, they can retrace back themselves from 0.5 as well, they can retrace themselves back from 0.3 as well, but the main important you can say the zone, that is from 0.66 to 0.618. okay, so that is the main aim. So whenever our market will reach at that point, so then we will be going for a trade, we will be making our entry. Okay, in which direction? Let's see. Now you can see my market, it came down. Okay, then it went back again from 0.5 level. So if you are a scalper, you could have taken a trade from this level from 0.5, because this is a very good level. So the market, if it will retrace itself back, okay, to 0.5, so at that time you can do a scalping with the 1-minute time frame. Okay, but this is just for the scalpers. Okay, for the day traders who usually take their trades for 2 or 3 hours, so they have to wait for the market to go to this level, to 0.66 to 0.618. okay, then you can see after that my market went to this level, that is my block or that is my zone. Okay, and after that you can see there was a good downward movement for at least half an hour. Okay, so I would be buying a put option at that point of time, right? Put option ATM strike price. Okay, at this point of time, then you can see again my market retraced back, and when this zone, that was, you can say that was my zone, or you can also consider it as a supply zone, because my market is moving in the upward direction. So you can see when this zone was successfully broken out, okay, so at that point of time I have to change my interpretation, I have to change my direction, because right now I was analyzing like from where the market will retrace itself back, but then when this zone was broken, at that time I know now the market has changed its character. So now at this point of time, on this point of time, I will trade in the upward direction. So then I would be going with the call ATM option, okay, if this zone is broken out successfully, right? So that is the theory behind it. Okay, so you have to consider this zone. If you are a day trader, okay, you can go for the scalping if your market will retrace back from 0.5 as well. Okay, now many of the traders must be thinking, what is this level? That is 0.382. okay, so if the market is at 0.382, the market came here, it went back again to 0.382. Now this level will give you a retracement back only when there will be a good red candle. For example, you can say a marubozu candle, okay, a bearish engulfing candle. So if you will notice any candle on 0.382, for example, my market came back to this level, retraced back, then there is a good engulfing candle, a red, okay, bearish engulfing candle. So at that point of time you can make your entry in the bearish direction from 0.382, right? But if there is no any kind of this candle which is a very strong candle, so at that point of time my market will retrace back to 0.5. so that is the condition for scalpers. So scalpers can be active on this point of time, 0.5, but for the day traders who want to hold their trades for a little more duration, they have to wait for the market to come to this level, right? I hope the concept is clear. Let's see this example, or again application on some other stock. So for other stock I'll be applying some stock here. So for the stock we can choose, let's choose randomly, but we can see, you can say the Idea was performing good tomorrow. Okay, so there was a very good increase in price in Idea. So let's see how the Idea is doing right now. So we will be applying Idea, the chart of Idea here. Okay, now in chart of Idea you can see the movement started from here. Okay, currently the market went up to here, and then there is a downtrend. Okay, a significant downtrend in 5 minutes. But we will be analyzing this in the 15-minute first. Now you can see my market gave me a very good downward movement. Okay, so there was a very good downward movement. So what can I do? I will just again choose the Fibonacci retracement. I will apply it here. So I have to apply it here. So the market, the movement started from this point of time, from this red candle. Okay, and the movement existed till this point of time, right? The movement existed. Okay, sorry, I have drawn it from the wrong direction. So the movement started from this point of time. Just a second. So the movement started from this point of time, from this red candle. Okay, so I'll place my higher mark on the high of that candle. Then you can see the movement, it lasted till this candle. So I will apply my lower band to this point, right? Lower band to this point. Now you can see here in this point of time when my market is live right now. Okay, so it gave me a movement. Okay, here. Then again my market went back to this level. Now you can see in this point of time, I'm not getting any candle, strong candle, that is a marubozu or that is an engulfing candle or a hanging man. I'm not getting here. So this is a signal that my market will not retrace back. Okay. So then you can see my market went back to 0.5 level. Okay. So it went back to approximately to 0.5 level, and from 0.5 level, when it reached here, so then I can see my market gave me a rejection from 0.5 and currently it is going in the downward direction, right? So this can be a moment for the scalpers where they can gain 15 to 20 points, okay, in a particular stock or index, right? Now, if I am a day trader, so I will wait for my market to reach to this level to 0.66, okay, to 0.618, and when the market will reach at that zone, okay, so I will wait for the market to revert back. But at any point of time, if there will be a green candle that will be closing above this range, so at that time, at that point of time, I will change my interpretation, I will change my analysis, and then because the market has changed its character, and then I will be going for the call option in this particular stock. Okay, but if my market will be stuck in here, okay, so at that point of time I will go for the bearish direction, because from this range my market usually gives me a revert back. So this is how you have to trade with the Fibonacci retracement. I have shown you some levels, I have shown you some settings with which you can apply it efficiently, and it will work flawlessly for you if you are a intraday trader. Okay, so I hope the concept is clear. I hope you got to know something good today about Fibonacci retracement, what it is actually, how it works in market, okay, and how you have to trade with it. So for thank you watching this video. Okay, अगर आपको पसंद आया, you can like this video. Make sure to share it with your friends as well. अगर आपके कोई views है, you can share your views in the comment section. Make sure to subscribe the channel as well. Thank you so much, guys. This is your trainer Ankit Singh Rawat. Have a good day.